What is going on, traders, investors out there in the world? Welcome, welcome, welcome. I hope everybody is having an amazing Digital Wealth Wednesdays, guys. I'm your host, the Digital GOAT. Again, hope everyone is having a prosperous week. Hope you're making a lot of money within the markets, guys. But today we're gonna do a little bit of a different focus. I hope you guys can hear me. I hope my light in the back isn't a distraction. If it is, I'm sorry because I like it a lot. But anyway, guys, I want to do more discussion today versus just the normal, hey, let's, pull up the chart, mark it up. Now, obviously, we will do that, guys, but let's just talk about the economy. What I've been seeing going on, guys, is that a lot of people aren't prepared for what's going to happen in the economy. Now, guys, I'm no analyst. I'm no financial advisor. I'm no economist. But again, I am a trader. So knowing what's going on in the economy pretty much puts me at an advantage over everybody else because I get to see information that the average person isn't really paying attention to because the only news source that they probably use is CNN, which we know that's like half and half, guys, or the only news outlets that they know. They don't really understand that there's other material out there or resources that they could utilize to pretty much figure out what's going on in the economy and dealing with finances, guys. But first and foremost, let me set myself up because I have no music, guys. Like I normally have music, so give me a second to set that up, guys. And as I share my screen with you, I might as well pull up a chart to because our topic, obviously, guys, is going to be the dollar index. If you guys follow news, you understand, and especially everybody should be following news anyway. Uh, for the most part, but let me pull up the dollar index before I go into what I wanted to do and pull up some music for me, man. I gotta have some vibrations in here, guys, real quick. Nothing too loud. All right, where we at? Um,
Are you a filmmaker or a content creator and looking for high quality music and sound effects for no additional fees? If so, you gotta check out Artlist.
okay, awesome, guys. I got that up right now, so I feel better about talking. You know what I'm saying? So let me get this up. Do I have? Okay. So obviously our focus is going to be the dollar index, guys. This is what I was using for trading earlier, but it's going to help make sense when I explain, guys. But anyway, if you've been following the news, any of my day traders out there, if you don't follow the news, you're probably not really paying attention what's going on. But guys, today we had a rate hike for the Federal Reserve, for United States Federal Reserve, guys. Brought the market not really chaotic, but had a pretty much 75 basis rate hike, guys, that brought the market up. Now, currently, what we're looking at the market is it being down. Now, the one thing that I want to emphasize, guys, and I've been talking about this a lot, amongst my peers, even really putting it on social media. Where is it at? Oh, okay, over here. Well, one today, as you guys know, if you can see my screen, let me make sure not desktop. Okay, if you see my screen, one, I urge everybody to take Bloomberg as serious as a heart attack. If you don't know what's going on there, guys, or how to read it, obviously you're not heavily invested into, stocks or foreign exchange, anything like that. But anyway, guys, the Fed raised their interest rates with a 75 basis points hike, guys. If you do follow the charts, you saw that there was a lot of volatility within the market where pretty much the dollar index probably shot up about over 100 points, which is very big for the dollar index, guys. Now, again, if you don't understand what I'm talking about, guys, I get that, but follow along because this is important within the economy, guys. So that raised because they needed to pretty much raise the market up, guys, right? I don't know their whole premise behind doing that, but I know it was a necessary process. The key thing that I want to highlight, guys, is that Fed hikes by 75 basis points, which we knew. We've known that this was going to come on this day, guys, as Powell sees no U.S. recession now. Now, there's a lot of talks about the recession happening, guys. Understand that in my experience, what needs to happen for a recession, one, there needs to be two quarters where the market is pretty much doing bad, guys, you know, in layman's terms, right? We really haven't had that. We've had pretty much a topsy-turvy or, you know, wishy-washy market where it hasn't really been showing any strength up, hasn't been showing any strength down, been kind of ranging, guys. But the only last move that we have is that the market has been extremely bullish, extremely hawkish. If you know what that means, that pretty much inflation is here to stay for a while, guys. Now, the one thing that I've been noticing, you know, viewing these analysts, guys, is that we're pretty much in danger again of inflation getting even higher, right? So what is that going to cause, guys? It's going to cause interest rates to go high. Now, within inflation, if we're looking at inflation to get high, what do you think else is going to get high, guys? The cost of food. Again, the cost of gas, energy, things like that, guys. As an advocate or as a trader, guys, I will urge you, again, no financial advice, I will urge you to really start looking into using other sources of energy, such as electric vehicles, solar energy, hydroelectricity, guys, any other energy out there, and start putting your money towards that stuff, guys, because again, gas, oil, gas, things like that, guys, they're going to end up becoming somewhat unaffordable. But the American people, just alone, because I am in America, have shown that they can actually maintain what the economy is dishing out. So for instance, guys, gas was at $4 a gallon on my side of the world. I'm on the East Coast, guys. So gas was at $4 a gallon, right? Close to like $5 a gallon. I know in California that it was at $7 a gallon. But guess what, guys? People were still going to work, right? People were still going to work. They needed to go to work, obviously, to pay their bills with all the inflation that's going on, guys. But what are we showing the economy? We're showing the economy that no matter what they pretty much throw at us, even if people literally can't afford it, they're affording it, guys, because people are still going to work. Hell, people are still going out to have fun, to party, things like that, guys. Stuff that pretty much is wasting their income, but also things that they need to do, guys. So what the economy sees is that, well, even though, you know, this is putting people in tight financial situations, people are adjusting to it. People are finding resilience and managing what's going on. I know, you know, Jerome Powell, this gentleman that's right here, guys, on the front page of Bloomberg right now. I know this gentleman even mentioned that in the last meeting that they had. When was this? I think this was like June, where he said the American people are adapting to pretty much what the economy is demanding, guys, right? So I'm here to tell you guys that inflation is pretty much here to stay for a while, and stop with the recessions talk. Now, again, at the end of the day, nobody knows what could happen, guys. Now, you know, you got these big wigs now. I'm sure somebody knows what happens, but as far as like the little people like me or you, the only thing we could do, and even some of these analysts and quote unquote experts, the only thing they can do is give an opinion based off the data that they're receiving in the market, guys. You can't really go, because a lot of this information is new. You can't base it off of what's been going on in the past. The only thing you can use is the examples that the past have shown us in order to figure out what may happen in the future, guys. And the way it's looking, now let me go back to my charts, right? Now, the way it's looking, guys, is that the market is pretty much going to continue to rise, right? Now, when I say rise, I mean in comparison to, let's go to a monthly chart, right? Let's go to a monthly chart, guys. Now, the last time we saw the dollar spike aggressively, as it's been pretty much on this hawkish tear, guys, is pretty much the 1970s. That's the last time we saw the dollar pretty much as aggressive as it's been. And here I can show you guys actually straightforward, right? Let me clear this out. So if you guys see, you know, hopefully you guys can see, but where my cursor is at, pretty much this block was 1970, right? Let's do this. So the dollar was pretty much trending down pretty much from 1970. 1978, and it had its spike pretty much at 1980. I'm not even gonna go into like things I can throw out why the dollars spiked up by then, because obviously we know, I mean, that was before I was born, guys, but obviously we know due to history that wasn't a good time in America. Drugs were being on the streets heavy. So I don't even know what's the premise behind the dollar actually being so aggressively hawkish in that time period. But man, it was a great time to be an American if you knew what you were doing within the economy, or you had the income to make it affordable for yourself, guys, right? So let's say 1977 through 1980, right? 1977 through 1980, pretty much on this block time. Let me put that below. I don't know why. Oh. All right, we're good. 1977, 1976 to 1980, guys. This was the last time that we had pretty much a hawkish move. What the fears are of the analysts, guys, is that the market may in doubt actually do one of these numbers again. The dollar being extremely aggressively bullish, which one that kind of pretty much symbolizes where there's no fear of a recession as of right now. We do have a level of resistance up here that we do need that for the dollar to pretty much test. But pretty much what analysts are fearing, which would do the economy some harm, guys, is this movement up here, right? Over here, 1976 to 1980. They have fears that the economy may pretty much respond in this same fashion, guys. I don't know what will be the trigger part behind that, guys, but what I'm here to tell you is that you guys that are still investing, the same way, or not really looking for investments, the time is now, guys. One, if you are an investor, if the dollar was to pretty much react in this fashion, guys, for you guys that do stock trading, or you guys that actually invest in stocks, all you would have to do is actually just buy the dollar, like physically buy the dollar, guys. Find a, platform, find an interface to start pretty much utilizing your money, a trustworthy one, guys. I don't have any ones I can give you, and I probably wouldn't do that. I'll probably throw some ones that I use as a recommendation on my description, guys, pretty much when I'm done. But overall, you choose what you see fit, and you guys can start investing in the dollar if the dollar is still showing strength to the upside. But what I'm here to tell you is that, yes, the dollar is still showing strength to the upside, guys. What does that do for the rest of the world's economy? Well, let's go to other pairs such as like the sterling pound and against the United States dollar, right? What does that do against other pairs? Now, because there's no fear in the United States of going into a recession, that should pretty much trigger, because the dollar was once a superpower and the dollar still is such a superpower, that should trigger the rest of the world that's against the United States as far as when it comes to trading currency, guys. That should trigger them into a recession. You see what I'm saying? Because if you just look at the movement, even if you don't know, well, what qualifies a recession, what needs to happen with the recession, well, I could just show you blatantly, guys, the last time the United States had a recession. And that's stuff that I pinpoint, right? That's stuff that I look for. Okay, when the United States had a recession, what was the last recession we had, guys? Many of you know, because a lot of us, I was getting ready to pretty much graduate high school at that time, went to a military school, and I went straight into the Army during the recession. As a kid, or, as an 18-year-old, I didn't even know the impact it was doing, but you could see it around, guys. Families getting laid off from their jobs, family members having to come back and live with other family members because the economy just went aggressively against us. Because at that time, guys, 2008, let's find 2008. Well, we were already triggered into a recession, guys. Pretty much we became in a recession. That's October 1991. Is that October? Wow, that's crazy. October of 1991, And then that was the last time the dollar was extremely low. And what triggered into a recession was October 1st, 2007. Now, obviously, guys, the recession, the information on the recession happened before that time frame. So pretty much 9/11. If you look at it, guys, 9/11 was pretty much the driving force for triggering us into a recession. That was a big impact on the United States, guys. It definitely hurt the economy. And again, with them targeting the trade center, pretty much affecting everybody's, stocks and bonds and things like that, guys, definitely hurt us, right? Definitely hurt the economy, guys. So I don't see, pretty much, if you just look at the data, if you just look at this chart, I don't see any possibility of us going into a recession right now, guys. Well, what I will say is that, within these parameters, within 1977, 1980, guys, if we have a movement such as like that, and it doesn't have to reach, to the peak that, this time frame, pretty much 1980 all the way to 1984 went, right? It doesn't have to necessarily reach that peak, but if it starts showing pretty much the same picture, guys, and I don't mean exactly, but I mean, aggressive moves to the upside, yes, that could put us back into a recession, guys. Again, for me, seeing the economy crash into a recession, it had to be below this point, 1997, which was about, the dollar was worth 78 cents at that time. You see what I'm saying? It was worth 78 cents. So if we're really going to be into a recession, one, we were pretty much know ahead of time. So again, guys, for you guys that I was saying, buy, invest in the dollar in its entirety, right? Invest in it on some of these stock apps and some of these exchange trading apps, guys. Investing in a dollar or buying the dollar, that's what I meant, buying the dollar, guys. When the time comes for us to pretty much really have fears about a recession, what could you do on the back end? Well, again, guys, no financial advice, but I'll tell you what I'll be doing. When the dollar shows signs of us triggering into a recession, or the start, the start of us going into a recession, I will personally be selling the dollar. You can actually sell the dollar as a stock trader, guys. And again, these are little small tidbit things, how you can combat inflation, guys. So don't have fear, but at the same time, you need to figure out other alternative means of you bringing in income, guys. Because I'm telling you, the way the economy is moving, it's more technology based. If you haven't seen the commercials or the ads now, guys, they're looking at putting in machines just in McDonald's alone, right? So McDonald's or, fast food restaurants that probably either don't have a big name or depending on where their location is at, guys, they're looking at, replacing humans and then just only having a certain amount of employees to see if that could be efficient. Right now, they're doing very well. So if it starts with fast food, where will it spill over to? It'll spill over into corporate. It'll spill over into retail, guys, because they'll see the progress that having an AI or a robot doing the work and not even having to pay. I mean, the only thing they would probably be looking for paying out is, the expense of the robot, and then having somebody who can be maybe not an expert but proficient in maintaining it. But overall, guys, that means jobs are going to start getting cut, guys. You understand that? Jobs are going to start getting cut. And yes, it may sound far into the future, like that won't happen in my time frame, GOAT. I don't know what to say, guys, but I do believe it will happen in our time frame where we will be the first people to start seeing the transformation of how pretty much daily life is going, guys, how retail systems are work, how fast food industries are working now because they're being replaced by AI. Hell, in airports, they're already doing it, guys. So again, they're going to have it to where, one, they believe they have a more trustworthy approach to it because, again, they don't have to deal with a human. You know what I'm saying? And two, guys, it's just easier and probably going to be less expensive and less the hassle because, again, when we saw COVID happen, when we saw 2020, the pandemic happen, businesses had to figure out, like, man, if I don't have personnel, how do I still keep my business afloat and not have, players there? So what do you think? They've been hit with proposals. Hey man, we can put a system, we can put an AI, we can put a robot within your office space, within your restaurant that can do probably 10 times, if not, twice the work of a human being, and then be more proficient at it. And guess what? Yeah, you may have a higher fee up front, but overall you'll be saving way more money. You think investors, you think business owners aren't going to jump at the opportunity to do that, guys? So I'm here to tell you, you need to understand, one, how to combat the economy, guys, and you need to be taking investing a little bit more serious, or just looking at new ways to bring in income that, one, doesn't have to require you to physically be there, guys. That doesn't have to require you to be there. That can grow itself, you know what I'm saying? So God forbid you get sick or injured, your business or, you know, the money that you're bringing in can still stay afloat, because I'm here to tell you now, guys, inflation is just only going to get worse. Gas is going to go up. I don't see personally gas going up the rest of this year, but I do see some threat in 2023. I definitely see threat in 2022, guys. I mean, I'm going backwards in time. 2024, guys. So I'm just here to really emphasize that. Now, again, this does go into correlation on how I view the charts, guys. So I'm just giving you pretty much my own personal sentiment on, one, how I approach the market, but two, how important it is to stay up to date on what's going on in the economy. Because again, guys, you could pretty much get information where, again, if you have the dollar amount, if you have the finances, you can take advantage of that and be ahead of the game, such as the housing market, things like that. I know myself, I have been working on projects to really change the dynamics of what I'm trying to do, guys. I'm not going to give you what I'm trying to do because, you know, I don't want to put, you know, my ideas out there, guys. But I'm here to tell you guys, you need to be thinking of that, you know, wholeheartedly. You need to be thinking of that. But also, just with the example that I gave you guys, utilize the resources we already have, the ability to invest in a dollar, the ability to sell the dollar, you know, things like that, you know, cryptocurrency, you know, so forth and so forth. I understand the lackluster of people not pretty much having 100% confidence in crypto, but guys, crypto is going to show you something. And again, for us, that's of people my age, you know, 33 and up, it's probably going to be more beneficial to our kids and grandkids than it is going to be for us. If you miss these initial, you know, big spikes in the market, then you probably were just out of luck, guys. You know what I'm saying? Wrong place, right time. You know what I'm saying? So don't stop your agenda on really trying to dig deep into it, because again, you would be able to provide this for your family if cryptocurrency is something that is going to be profitable. And I think it is going to be profitable. I think it's going to be here to stay, guys. But let's get into the market. I just wanted to open up with that, guys. I really want to do a more talking base with you guys to help you guys understand that, you know, the things and the resources and you know, the tools that we have to, again, combat the economy, to combat inflation. So again, when inflation starts to come down, we can take advantage of that in different ways as well when it comes to investing. But let's go into what I was looking at, guys. Now, I do want to talk about Euro USD because Euro USD, I'm kind of mad at myself because I missed the opportunity this morning, guys. Because I didn't get out the market at the right time. I'm pretty sure you guys know that feeling, right? Not getting out of the market at the right time, right? But I knew it was coming, right? So the Euro had what did they have? They had the idea of a rate hike as well, but I didn't have any news outlet. You know, normally I hear news or I'm following them on Bloomberg to see, well, really the European Central Bank. So President Lagarde, I'm normally trying to keep up with her because, again, I do follow the euro heavy as one of the currencies that I do trade pretty often, guys. And it followed, you can use that information for so many things like oil, gold, things like that, guys. So they had the expectancy of a rate hike themselves, guys. And it kind of threw me off because, again, I'm still new. You know, I'm 4 or 5 years in trading, well, 4.5 years in trading, guys. But again, it's still new information to me, right? So seeing that, you know, we had the expectancy of a rate hike, I knew that the dollar was going to start to pretty much go the opposite way. If we're looking at a rate hike for this currency pair, Euro USD, if USD is at the end and the dollar won, they were looking to do a rate hike, but also to pretty much slow down inflation as well, guys. So if I expect a rate hike for Euro USD or just the euro in general, and I'm looking to combat it against the dollar, I'm looking to trade it against the dollar, guys, it obviously is signifying that the dollar is going to get bearish, right? Or the dollar is going to start selling off aggressively. Now, guys, what's the purpose pretty much of a rate hike? Pretty much, guys, from what my understanding is that when they utilize rate hikes, it's to prevent them from either going into a recession or decreasing inflation, guys, because it just has to do that by pretty much the fundamentals of trading, right? So as you see right here, guys, Euro USD pretty much got aggressively bullish today. I was selling it yesterday, but during this news, pretty much when Fed Powell was talking, they did their 75 basis rate hike, had the dollar go up pretty much. Again, I think it was like over 100 points. And then pretty much dump on the other side, guys, to pretty much wipe out any potential buyers that may have been, and it just needs to have that function in order to balance the market properly, right? So if you see, pretty much, I was in preparation to potentially take this trade, but wrong place, right time, as always, guys. But what I'm looking for is, because again, if you just look at overall the market, the one thing I do, guys, is start off with a top-down analysis, because you just have to do that, right? You have to see what the overall move of the market is showing you, right? And if we just look at it, guys, Euro USD has been on a selling tear, or just, falling, bearish, dovish, whatever you want to say to make yourself feel better. But they just been on a pretty much selling tear. And I do think that we're still selling, guys. What I think is that once we hit a pretty much strong level of structure for Euro USD, then we'll get that big bounce that we're looking for in order to pretty much stop the euro from going into the recession. The only thing I see is that the way the economy is being structured right now, if you just look at America as a whole, it's going to trigger other economies to go into a recession again. That, the dollar is pretty much trumping, and the dollar is right now a big superpower compared to every other currency out there. I haven't connected it to every currency, guys. So if there is a currency that's trumping the dollar right now, it just may be that I'm not paying attention to it. But as far as the currencies that I follow, I haven't seen a currency that's trumping the dollar right now, guys. So what does that look like for Euro USD? If we're looking at the dollar to actually go back and still respond to inflation, guys, we should be looking at Euro USD to start coming down. Let's actually look at the dollar real quick on a smaller time frame. I just wanted to show you guys that, and we'll focus on Euro USD. So pretty much, again, guys, if you just look at this naturally, the dollar has been, again, aggressively bullish. This is a monthly time frame, but nothing has really stopped it. Nothing has really stopped its momentum. It's just been slowing down, as these analysts like to put it. The market has just pretty much been slowing down, right? So if I'm gonna just do my top down weekly analysis, guys, this looks like, this is pretty much the move. No, it wasn't. Let me go into a 4 hour. I want to go into the move that happened today, right? So this was the move. This was the 75 basis point rate hike, right, guys? Now, what the market did was flush out all the buyers, because again, what they are trying to do is get a handle on inflation, guys. They are trying to get a handle on inflation. But again, as consumers, we keep spending. So we're just as the blame with inflation, not to mention the things that have happened in the past with like the stimulus checks. The economy, really, the dollar really wasn't spending any money in the whole entire year, guys. So now everybody's spending money in 2020. If you guys remember, pretty much towards the end of 2019, all the way for the entire year, the economy really wasn't spending money, especially resources were running out. Y'all remember the whole toilet paper incident, right? So imagine when people were able to, one, get these resources, but also two, go outside and spend money. Bro, I'm sure people were spending money like nobody's business. I'm sure the average person right now that's even stuck at home is probably on Amazon or Etsy or some of these sites, just spending money needlessly, pretty much contributing to the rise of inflation. Now, we're not the sole perpetrators, guys, but again, we are contributing to it. If you just look at it from that perspective, guys, we are contributing to the economy going higher in inflation. Really, if America just really at least stopped doing things for like 2 weeks, even going to work or spending money on gas, the economy respond off that, guys. But we're not doing that, guys. People are just, they lost their minds in 2020. That has an impact on the economy, which people psychological. So now it's like, man, I was locked up 2020, and if you're a parent like myself, I already understand. You're locked up. Not to mention people that are in these areas that had snow days during COVID. Like, you just want to be outside and like don't want to ever feel like I'm restricted to my home ever again, guys. So again, you want to go out and do things. Going out and do things costs money, guys. Before you know it, you spent $1,000 in a week without even intending to. And in the past we were intending to. Now it's like, because again, you just want to do things. Overall, you're contributing to the rise of inflation. But let's look at the dollar again, man. So if we just look at structure right here, right? Everybody understands what structure in the market is. If you don't, guys, you need to go back to a couple of my other videos. I'll try to pin one of my videos that talks about support and resistance, because I think it's pivotal that somebody understands that to a T. If you really don't understand support and resistance, you really don't understand the market at all, guys. All right, so we have structure right here, 4-hour time frame. I'm liking what I'm seeing right here. A little bit of rejection. So I'm wondering what the market is going to decide now. Now, I normally don't enter the market at all, guys, until like 8 o'clock, because I get a little bit of a stronger bias on what the market is trying to do. Not to mention, if you look at it right now, guys, let me go to Euro USD. I want you guys to see this. Pay attention to the resources that you have within the chart. If you look at it right here, guys, there's a timer, right? There's a timer saying that what time this candle will close on this block hour, right? On the 4-hour time frame. You have an hour left for this 4-hour candle to pretty much close, right? So I normally wait until 8 o'clock, 8:30 to start actually looking to enter in the market, because if you look right here where price is currently at, the dollar is actually not physically open on the 4-hour time frame. You see that? It's probably open like on a smaller time frame. Let me see. Nope, the dollar's not open at all. So what you could have a gap up, you can have a gap down, something like that, guys. But while this market is not open, it's not really safe to be trying to trade the dollar. And that can kind of go for any pair, guys. So for you traders out there, for you investors, I will warrant you to say, hey man, if you're looking to get back in the market, if you are trading like that sometimes you get quote unquote lucky, but we want to be professionals, guys. Sometimes it's okay to enter in that market at that block hour of like 6 o'clock, 5:30, something like that. But again, that's your own. That's you making that decision and understanding that risk. I would tell you the better move would be to wait for around like 8 o'clock, guys. So the only thing I could do right now is draw out what I'm believing the market to do, guys. And until I get a little bit more data, then that'll make me feel comfortable to say, like, let's look at an entry. But what I'm going to do is I want to look at Euro USD and I want to look at GBP JPY, guys. So right now I'm looking at Euro USD, guys. It pretty much gave us a selling movement in the market. The only thing is that it would have to either respect this resistance, or it would have to pretty much respect this candle right here, guys. Now, this actually is engulfing candle, or you might want to treat it as like a piercing pattern, guys. I would probably treat it as a piercing pattern because it's not strongly aggressive, but you can treat this as a bearish engulfing. Did I say bearish candle? I meant to say bearish engulfing if I said that, guys. You can treat this as a bearish engulfing, or again, if you want to be politically correct, you can treat this as a piercing pattern. And again, just kind of back out, guys, if you've already done your top-down analysis, just to kind of see what the market patterns are presenting. Again, right now it's 742. So, the dollar is still not open. Again, we'll have a little bit more data. What I could say here is that we do have the potential of an evening star. Just to look at that on a 30-minute time frame. Evening star right here. So y'all can see that. So 30-minute time frame, that's not a super strong time frame to me, but you can get some good data off of there. So one thing that I like to do, guys, is just throw my fib on there and see if the market respects areas that I know there should be a reversal. Well, if you just look at it right here, just this candle. Now let's focus on the selling candle of the evening star, right? So if you threw a fib on there, as we know, as traders, we know that the 786 is a strong reversal zone. 618 definitely. We would love 50%, but we know 50% is pretty much like a medium retracement. 38 shallow. So price, actually came up 786 of this evening star on a 30-minute time frame, and right now it's actually showing signs of rejection. Now that doesn't mean that price is telling us that, yeah man, I'm looking to sell right now. That just shows you that, for me, I like seeing those signs. I want candles to close, but I like seeing those signs because, again, I'm more of an aggressive trader where it's like once it gets to my position or once it gets to an area where I'm comfortable with, I'm definitely pulling the trigger, guys. To be honest, hold on real quick, actually. All right. So let's draw a zone here since we do have a level of resistance being formed on like the 1 minute, 5 minute time frame. Why is it not? Oh. Technology, right, guys? So once I've gotten that information, guys, what I'm looking for now is to see if it still respects it on the hour, 4-hour time frame. Again, just kind of like tracking the trade. So I like what this may potentially bring out, guys. The only thing is that I do need for it to be 8 o'clock for me to consider this a valid trade. But if it is, then this is what I'm looking at. Pips. So we got 0.0. I mean, I'm just doing it after the decimal, guys. So I'm not like counting the whole number. I don't think I know any trader that does that. So everything after the decimal, right? So 0.02054 is what we're looking at. 0540. I mean, at that point, it's just a pipette. As far as for an entry, guys, if we get it, again, I want to wait till 8 o'clock because just to see what the market decides to do, a gap up, gap down, spike up, spike down, something like that, guys. but that's what I'm pretty much looking at to enter. To me, I like the momentum right now, guys. Again, oh, so that's what I wanted to show. So the fact that we identified that on a 30-minute time frame, if you guys were on my last session, and I do apologize that I've been out the network for a little bit, guys. I got sick. Thank God it wasn't COVID though. But right here, I really want to emphasize this. Anybody that has partnered with me or traded with me before, they've probably seen this before, and they probably just said it out loud to themselves. This is a double doji right here, guys. Now, again, I gave you guys the parameters on the last, was it the last session? I think the last session, you guys can find it. So if you just go back to my videos and tune into the last session, I believe I talked about double dojis. If not, it's the not the NFT one. And I also got to either get that edited or remove it, guys. Yeah, I believe it was the last one. Very good picture of a double doji right here, guys, man. Again, something of my own finding. Now, double dojis do exist in the market, but it's something of my own finding. Now, with double dojis, guys, this thing could come up, you know, 100% of this candle right here, 100% of this whole movement, like right here, from this bullish candle to this bearish candle, if it's true. If it's true as being a double doji. But here's the thing that gives me confidence. I found this on a 15-minute time frame, right? What else did I find on, well, not what else I found on a 15-minute time frame. What did I find on the time frame higher than that? The next time frame up from the 15-minute is a 30-minute. What did we already identify on the 30-minute time frame? This is where you got to pay attention to what's going on in the market, guys. For people that really don't pay attention to patterns, I really feel like you don't need a lot to make money in the market. But again, it just depends on what type of trader you are, guys, and what you're looking for, how many pips you're looking for. But me, I like to know enough information to make a calculated move within the market where I can stay in the trade longer, if possible, if possible. So I identified something of my own finding, a double doji on the 15-minute time frame, as you guys just saw, and an evening star. So I have two confirmations on two different, time frames that follow each other in sequence, because the next one higher up is a 30-minute. The next one lower down is a 15-minute. You see what I'm saying, guys? So these time frames pretty much are locking in that we have potential selling opportunity. Now, I'm a fan of using the MACD. I don't live by it, but again, if I just look at the arch on this MACD, guys, it does look like it's given a curvature that it may want to start selling. What will it look like on the 15-minute? Let's see. Now, the MACD is either faster or lagging compared to the market. But if you look right here, guys, at this point now, this would be if you just want to, not to confuse anybody, if you just want to make it seem easier, this would be your selling point of the market, right? This line, this orange line, and this would be your buying potential, right? Now, in order for it to stay true as a buy, the blue line needs to be dominating the yellow gold line, right? Now, if you see right here, the market crossed pretty much at 6 o'clock, signifying that we have selling strength within the market, guys, because currently, until the market opens at 8 o'clock, we pretty much have where the trend is showing that it's switching. Now, the market just has to respond to that, right? The MACD is either going to be before or it's going to be lagging, guys. And right here, it is showing you that, yes, at pretty much 8 o'clock, we did, in fact, switch the trend. Now, are we going to stay true to the trend? You see what I'm saying? We just need the market to pretty much do its thing on its live, on a live chart, guys. And then we pretty much have opportunity to sell right there. So the only thing I could see is a potential spike up. Again, you know what I'm saying? I'm going to enter into this trade. I'm just telling you guys what I'm doing. You do whatever you want. I do feel that there's more experienced people on my calls. So you do whatever you feel like you need to, guys. This is just the information that I'm giving you guys that I'm going to be utilizing to make a decision in the market and enter of my own accord. But if I'm looking for the safest space, the safest time to enter is going to be somewhere around 8 o'clock, right? Let's look at this. So you see right here how the market is pretty much the blue line has pretty much taken over on this 1 minute time frame. But again, it's doing it back and forth, guys. So we really this is just exemplifying consolidation. So until we truly get a breakout, or until we truly get a direction in the market, we don't know what can be going on. But I'm just showing you guys how to pretty much utilize one, trading patterns, but also information within the market to decide, okay, what the market may actually be doing, and how I can pretty much, even within consolidation or even while the market's closed, at least create a bias. You know what I'm saying? Nothing in the market is going to be 100% accurate, guys. But again, you still need to be able to create a bias so you can say, okay, so you're not just out here just randomly saying, oh man, I think I'm going to buy here, or I'm randomly saying, I think I'm going to buy or sell here, guys. You're doing it with accuracy. And again, if the market goes against you, this is why this is important, because you need to have protection, which is going to be your stop loss. So if the market goes against you, guys, you're not losing a bunch of money because you're just entering in randomly. You see what I'm saying, guys? So that's what we're waiting for. I'll give out TPs to this. And again, if you're on this call, you're either going to have to rewind or take a picture. So I got you guys, and that pretty much concludes our sessions, man. Again, guys, I'm looking to do more. Stay tuned with me, because I am going to give out more tutorials on brokers that I do recommend. So I'll show you guys how to pretty much set up your broker. If you've never done trading before, if you've already done trading and you like your broker, stay with that broker, guys. Other things pretty much to navigate within the market. Like, I know a lot of people still struggle with TradingView. So simple things like that, but also more advanced measures. For me, I have my own trading regimen, guys. I have my own trading style. So I don't try to deviate from that plan. I don't try to give anybody anything I wouldn't necessarily do. I do know a lot of stuff in the market, guys, but do I utilize all of it? No, because sometimes you could end up fighting yourself in the market by utilizing all these techniques. Get one solid foundation, utilize that over and over. And again, if you do have something that you could use in the market, then apply that if necessary, but don't try to know everything within the market, because again, you'll be playing yourself sometime, guys. Let me get this out the way. These are pretty much going to be your exits, guys, where you're looking to exit once we get a little bit more information. Going to be your first exit. And again, guys, don't try to be the person that tries to looking for the targets. If the dollar amount is good, take it. If the trade looks sour, get out, plain and simple. There's really no rocket science to trading, guys. I promise you. Even though it seems like it, but there's really no rocket science to it. I am going to stay on for a little bit just to see what 8 o'clock does. But for the most part, guys, y'all have everything y'all need. Oh, what am I talking about? Bonus entry. My bad. My head was somewhere else real quick, guys. So yeah, these are your parameters. Again, depending on your lot size, you can adjust. But I know how I trade, guys. So I'm not willing to risk, a lot in the market, especially, with the risk level that I move at. So again, if you find that you can stay in the trade longer, cool. If you find that, man, I may validate the trade myself, but I need a little bit more wiggle room. Cool, guys. Again, everything's on your own determination. I'm just telling you what I'm personally doing. So we got 2 minutes until 8 o'clock. Let's see what the dollar index does and what actually it causes pretty much Euro USD to do it. I'm not in it, guys, yet because again I'm waiting for 8 o'clock. But again, I'll figure. Oh, okay, we got pretty much what we're looking for right here, guys. Well, not what we're looking. Well, yeah, what we're looking for. The market did open. It gapped down. So I do see the potential of it possibly popping back up since it gapped down. One thing that I have noticed with gaps, guys, is that the market tends to run away from the gap now for some reason. When I first started trading, it used to cover that gap almost immediately, like on the next candle. But we'll pretty much see if this this whole candle pretty much turns bullish, guys. That's exactly what we'll be looking for. I could definitely see that. Okay. All right. Yeah, this is definitely going to have to get filled. It just depends on when the market is going to want to fill it. But let's see. It's good to see what happens, generally at 8 o'clock, guys, right? Excuse me. So I'll probably be on for like 2-3 minutes, guys. If you got everything that you needed. Again, let me go back to Euro USD so you guys can get the parameters for it. I think that was like an hour time frame. So yeah, these are your parameters, guys. So again, you can rewind this back. Again, the information won't be the same because if you're new, this is a live market, so it may not look the same by the time you look at it, guys. You just need pretty much the information to the right-hand side. Okay, it's 8 o'clock. What are we looking at doing? What are we looking at doing, dollar? Well, the dollar already open, guys. So it's just about what the dollar is going to try to do. We already got our gap. That pretty much gave us our information. But if you look, it didn't really, between, like GBP, USD, Euro USD, it really didn't do anything to it yet. So we're pretty much still waiting on information right now, guys, to make a decision within the market. But again, if I'm going to look at entering, I'm gonna wait till like around like 8:15, 8:30, something like that, guys. So appreciate your time. I'll see you guys pretty much next week. Let me see. Am I missing anything? Next week is going to be the start because next week is a new month. Yeah. So I'm looking at to start crypto lounges on the weekends, guys, on Fridays specifically, either once or twice a month, guys. So that's where we'll be diving into pretty much anything crypto related, NFTs, metaverse. What I will do is I'll probably have one of my guests on, guys, one of my business partners, actually show you guys how to set up a crypto portfolio if you haven't done it yourself. So stuff that we're trusted by other portfolios out there or wallets that you guys can use yourself. Again, do your own research, guys. That's the biggest thing. Never just listen to what somebody says. You want to do your own research. You want to figure out what's going on within the market. I mean, you want to figure out what's going on, especially with all the bad news that I'm hearing of people getting robbed from cryptocurrency. And not to put yourself in fear, guys, but if you know what's going on, that's not going to happen to you guys. I've never had cryptocurrency robbed for me, but I also haven't been the person that's so money hungry and money driven that I just listen to what sounds good. I do my own research, guys. So one thing we had a saying in the Army was trust but verify, and then execute from there, guys. So I hope you guys found value on that call. Again, if Euro USD, if it breaks our threshold, I haven't entered in yet. If it breaks our threshold, such as this wick right here, guys, trade is invalid. So we can't enter the trade. But again, survey this trade. If you already entered, look at the trade accordingly, guys. We only have pretty much an 18 pip stop loss. So that shouldn't really do a lot of damage to people's accounts if it were to hit stop loss. Again, understand what you're already risking and going into the chart. I mean, going into the trade based off of your trading account. So it's the Digital GOAT, guys. Thank you for tuning in to Digital Wealth Wednesdays, and I will see you guys next week.